Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and I have with me Eyhab Aejaz. I'm sure I butchered that.
Very close. Eyhab Aejaz.
Eyhab Aejaz. Eyhab Aejaz. The Eyhab part is easy, and the Aejaz part, if you think of jazz, that makes it a lot easier. Co-founder and CEO at Breach Insurance. So Eyhab, thank you so much for joining me today. What is Breach?
We are a insurtech. We're building regulated crypto insurance solutions. We're structured as an MGA in the US today, but we are quickly evolving and evolving into becoming a full stack insurer out of Bermuda. Got some big initiatives in front of us right now, but really today we've been focusing on building out our MGA business with the first retail investor product for crypto insurance investors.
So basically, you're offering insurance to protect my crypto wallet from getting hacked, basically.
That's right. Yes. So there's these popular exchanges, crypto exchanges in the US, Coinbase, Gemini, CoinList, Binance US being some of them. They custody your crypto. You're using it to on-ramp to buy your initial crypto, to trade, maybe earn yield, invest in staking crypto that may return interest. In the event that there was a major hack event, our insurance product would be able to protect you as the named insured on an insurance policy. So these exchanges, many of them are doing great things in terms of like trying to get insurance that's available to them, maybe even having some captive structures, but it's really unknown as to what would happen if in the event that there was a really big exchange hack event. There has been precedence of some of these things that have happened. So with our insurance product, you have the ability to be the named insured in the event that there was a cold storage theft, a hot storage hack, a social engineering event, like a hack of HubSpot, for example, could have led to social engineering events that directed Tony to transfer his assets from a Coinbase wallet or a Binance wallet to an unknown wallet, rendering it inaccessible. So yes, to your point, protecting your crypto that's custodied at a popular crypto exchange.
Okay. So you mentioned that you went out of your way to say regulated.
Yes.
So insurance generally is regulated. So what was there an option out there for crypto insurance that was not regulated as insurance before?
Yeah, no, right. Currently, I think the vast majority of the insurance that's available in crypto is off of DeFi protocols, and it's an alternative to insurance. And I think they're doing great things for the insurance industry and pushing innovation. But in terms of having the requisite licenses, solvency requirements, and reinsurance required, those things aren't there. Which is what makes our product and our company so unique, is that it is regulated and best rated and traditional reinsurance backed. A lot of work and patience went into this. It is the path that has been less taken, but we think it's been really valuable to be able to present the crypto market with the truly regulated reinsurance backed insurance solution.
Okay. I want to ask how everything. How is it underwritten?
Yeah, it's a great question. There is no loss experience or underwriting experience on this, right? It's a brand new product. But what crypto has, what we have is 12 years, 11 years of really rich hack data. So why would people need our product? There's been 60 plus hack events rendering $60+ billion worth of crypto lost forever. Another 100 billion that's lost or inaccessible because people custody their crypto on hardware wallets, like these little Ledger and Trezor. And those things do great things. They're really, they help people feel safe. But the problem is a lot of people, most people like myself, don't trust themselves. Like, if I misplaced it, or if it broke, or somebody else stole it, it's gone forever. And it's a scary thought. So I referenced all of these events. What we've done, we've got a really awesome, smart person on our team, Jim Flynn. We actually hired him from American National Insurance, $30 billion multi-line carrier, as our head of risk and chief actuary. And we've been able to build our own proprietary data and work with other companies and create this product to be able to say that we can finally price the risk, and it's based on this rich hack data, 11, 12 years of rich hack data that is used to price and underwrite the risk.
Okay, so you have to create your own data, but
Yep.
but you can predict hack risk based on where I'm storing my crypto.
Yes.
Okay.
Yes.
So,
and that's how it's underwritten. To the rest of your question, to your point, we're underwriting the exchanges, right? We're getting comfortable with them as the custodian, how they're custodying your crypto, how much of their assets are custodied in hot versus cold storage, what their cybersecurity posture may look like, what licenses they hold, what the makeup of their leadership team looks like, how they're funded, how regulated they are. All of these things really go into our underwriting model, and then on top of that is leveraging prior hack data. Sorry, I cut you off, but you're
no problem. No problem. Okay. The application process, is it as simple as securely log into my Coinbase through your app, or do you ask me a bunch more questions? How does it work to get a quote?
Great question. It's actually a guaranteed issue policy. So all you have to tell us is what state you reside in to make sure you're qualified for the insurance. We are on the ENS paper. We're on surplus lines paper. So we're live in 30 states, 30 or 31 states today. We'll probably add another 5 to 10 states by the end of the quarter. But so you tell us what state you're in to make sure you're qualified. You tell us what crypto exchange you use to make sure it's one of the supported exchanges. You tell us how much crypto you hold. So 1 Bitcoin, 2 Bitcoin, 10 ETH, and then from there, all you have to tell us is how much of that crypto you want to insure. That's it. We don't ask for your blood samples or your height, weight, whatever, credit rating or whatnot. It's literally telling us where you live, how much crypto you have, where the crypto is custodied, and how much of the crypto you want to insure, and obviously your ability to pay, and the policy is yours. So we were really proud of the process that we've designed. User experience is paramount, and I think a new type of product like this. But underwriting questions are non-existent. It's qualification. It's exclusively qualification questions.
Okay, so I'm assuming there's been no claims yet.
Not yet. Yeah,
okay.
Fortunately, knock on wood for everybody, policyholders and the crypto industry alike. No major events have happened to the exchanges.
So is the claim process designed to basically be parametric? So if Coinbase were to get hit, then who your insureds are that were on Coinbase.
Yes, yeah. There's a lot of efficiencies in exactly that. You're right. You're exactly right. I mean, the FNOL is a really smooth process. Like there's a big button in our platform that you click. We're not hiding how to submit a claim, and you submit your claim through our platform, and not only are we adjudicating your claim, but all the policyholders, and we investigate all, because it's not going to be one policyholder that's impacted. It's likely going to be hundreds, if not thousands. So yes, there's a beauty in the efficiency in the claims, process. But yeah, you hit the nail on the head.
Very, very interesting. How was the process of getting reinsurance for this? Because it reminds me a lot of when I worked at Nationwide, Scottsdale Insurance, their earthquake book. It's never been hit. It's a 0% loss ratio, right? Someday, probably it'll be a gigantic loss, but they've had like 30 years of not a single loss. Yeah. So what was the process of getting reinsurance for something as catastrophic as this, where if you get hit, you have a whole bunch of policyholders getting hit at the same time?
Yeah, it's a great analogy that you shared. It's probably the first time I've heard that analogy, but that's a really good one. It was hard. A lot of primary insurer as well as reinsurer conversations. It took a lot of patience and 2 years in the making, right? To get a reinsurer comfortable with the risk, but we're, it's time well spent. But it was definitely a lot of work that went into it. But you're right. They had to have, so the primary reinsurer that we're working with has a unique appreciation and understanding of crypto, which is really the best path, the only path that we were going to be able to take early on, where it's somebody that really understood the risk, to be able to say, yes, this is actually insurable risk. And I think that's the point that a lot of insurers in the early days were getting stuck with, but it's really having a comprehension but the education continues. I think we continue to talk to people in the industry, whether it's agents and brokers that we work with, or speaking at conferences to talk about why this product is an important one to work on, but why this industry is an important one to insure. It's going to be an important part of the fintech ecosystem as we progress. So now is the time to learn it, versus when it turned into 5-10x of what it is today.
Okay, so yeah, the distribution. So you have you do have a direct distribution, but you also can go through brokers.
Absolutely, yeah. No, well, we're our product is available D2C, but it's really optimized. What we really built is a product that is gonna scale with broker distribution. So absolutely, we're appointing brokers countrywide. There's a national broker that we just appointed 3 days ago now on Friday of last week. We'll be making an announcement on that, and there's a couple of other national brokerages, household names that we're in conversations with as well. So yeah, this product is going to scale. There's a lot of education required. We don't want, as easy as we've made the process, as affordable as we made the product, 10 to 25 basis points per month for something that is viewed as really scary risk, and something that kind of pays for itself if you're staking it in a safe crypto asset, right? Like where you're earning 6 to 8% yield. This product kind of pays for itself, and kind of protects that investment as well in a way. So yeah, scaling it with brokers is a really important part of how our product and our company grows.
Okay, so for now, large brokers,
regional agencies, local agencies as well.
Oh, okay, so basically, if for the listener, if you're a broker and you're not asking your client whether they're investing in crypto, which is becoming more and more common because it's in the media so much, like large investors are investing in crypto, so it's becoming more and more common to
have clients that have crypto, that own crypto, right? Yeah,
absolutely. And I, as a broker, I would have never thought of asking the question.
Yeah, and it's sticky. It's sticky because as we want, as we're an MGA, so we're in BC as well, as we like clientele that we can have as clients for 10, 20, 30 years. age demographic of crypto holders is broad. It's people as young as newly graduated from college to recently retired. So it's a really interesting and sticky conversation that leads to other interesting things, like whether you're a life insurance broker or you're doing A&H or other supplemental coverages, or you're entering through somebody's garage, selling them auto insurance or home insurance. So it's a sticky thing that we also think we take a lot of pride in, because there's not many insurance companies that support crypto. We create a lot of broker tools, blog posts, education on the health of the crypto industry, where it's headed, how to have better hygiene in crypto, how to just be a better risk overall, and not be susceptible to an even email hack that could lead to your exchange account being hacked. So we do a lot of those things to kind of help the broker look good, and we take a lot of pride in that. I think one of the most interesting thing that we do for brokers is we actually file the surplus lines taxes on their behalf, just as a value-added service. It's not something that we charge for. It's just to make their lives easier. It is, as I mentioned, on surplus lines paper, it's a pain point. It's annoying. It's reporting, particularly as it relates to like a personal lines product. There aren't that many personal lines products on surplus lines paper. So we really take a lot of pride in the processes that we've created, and the overall efficiency in our reporting. So that's another little value add that we provide to agents and brokers.
Awesome. So I often ask, how did the idea come up? And it looks like, looking at your LinkedIn, it looks like you spent almost 7 years at Liberty in business development and distribution. So you're a traditional insurance guy by all measures. So how did the idea come that we should build an insurance company for crypto?
Yeah, I was fortunate enough to work at Liberty Mutual out of business school, and I spent 7 years there helping them build new products, entering new markets. I joined as part of like a leadership program, a rotational program that gets picked up and dropped off into different parts of the business. And I was fortunate enough to land in a startup within Liberty that was building an accident health business from scratch. So getting licenses in place, building a product roadmap, working with actuaries and underwriters and building distribution strategies, executing on them. It was awesome. And I think it really piqued my interest on how to build something from the ground up, and working with really smart and curious people that spent a lot of time teaching me things. And it really piqued this like entrepreneurial interest in and exposed this like scratch that I wanted to itch, and itch that I wanted to scratch. And the other thing is that like I had this, so you take this like entrepreneurial thing that I wanted to do at some point in my career, and then I started to Liberty started to get more involved in new risk types, like cyber insurance is one of them. And I was fortunate enough to work on a cross-sell initiative and started to see us doing more in cyber insurance. I had some friends on the cyber underwriting desk. Like, this is an area that I want to grow into. Non-work related, I got involved in crypto, started to invest a little bit, and some friends and I started a friends-only crypto fund. And we all were like, man, this is a space that we want to invest our careers in. And we're all kind of like, I don't know how we're going to do it. Let's just learn about the space, learning by investing in it. So I'm hanging out with a VC buddy of mine and a health tech buddy of mine, and we're just chatting one night, and they asked the question, like, you're doing this fun thing that's really interesting with other interesting friends of yours, but these hacks keep happening. How would you insure this thing? And I just like respond. I don't even think, I just respond like, well, what you do is you underwrite the exchange and offer this product on as a check the box thing while you're buying crypto. And my VC buddy is like, what are you doing on Monday? Like, you need to come pitch this to the partnership because this is a business. That's an investable business. And I was like, he's full of it. Not really. So I kind of kept kicking it. And eventually, like, I'm seeing that there was a need for not only there's this pent up demand for more crypto solutions, but this infrastructure that was necessary, and insurance being an important part of that infrastructure. So April 2019, I left Liberty and set up Breach with the vision of building a fully regulated native crypto insurance company. That's the background. I mean, I think it's just, and I figured out, and I learned that I was uniquely positioned to do it because I had this like vertical from like starting from scratch to building a product and bringing it to market. I just really had this unique experience, and I've been really fortunate to have a team at Breach that has those requisite skill sets as well, including my head of risk, head of ops, my co-founder and CTO. He's built a lot of awesome technology, has been in crypto since 2015, has been in banking for 20 years. So we've been really fortunate with the team that we have in place. And yeah, we're just kind of getting started.
Fantastic. I guess last question. So operating as an MGA for now, why become a carrier?
We like the risk. We've told our reinsurance partner that we would like to sit alongside them and participate in the risk. And we want to test new products and introduce new products. We've got some ideas on what else the crypto industry is really craving, but we love the risk. And I think I would be selling my team's technical depth short if we weren't going after a risk-bearing, risk retention model. The industry needs us to do it as well. The crypto industry, there isn't enough insurance capacity dedicated for the space. And two reasons why we built Breach is, one is to create net new insurance capacity for crypto, and secondly, advocate for crypto risks. I think those are two really important mandates that we've kind of created for ourselves of why Breach exists. And we wouldn't be true to ourselves if we weren't retaining risk and really going after new and innovative opportunities.
How do you manage the volatility? I mean, with crypto moving significantly, sometimes on a single day.
Yeah.
That would be hard for reserves and stuff, unless you're paying losses in crypto.
It's a great question. We're not only denominating the insurance policy in fiat, so in USD, but we're also paying claims in USD. So there's a one-to-one correlation between the risk that's actually underwritten. So let's say that you have one Bitcoin. That Bitcoin is worth $38,000. You get an insurance policy with an insurance limit up to $38,000. Now,
also, so the limit is denominated in dollars.
Yes. So the price of crypto plummets to $20,000. We either pay you back $20,000 or we make you whole with a Bitcoin in kind, right? We can do that. So I think that's the opportunity. Whereas the price of Bitcoin goes from $38,000 to $60,000, our platform will notify you, hey, Tony, price of Bitcoin has skyrocketed. You should think about, you're underinsured. You should think about increasing.
You're underinsured. Yeah.
So that's the opportunity. It's just like, honestly, as crazy as it sounds, it's kind of like homeowners insurance today, right? Like, cost of lumber has done what it's done. Copper, all these, the replacement cost of a home.
Yeah, you should raise your limit.
Everybody should be looking at. So this is a plug for you and others. Everybody should be looking at their home insurance policy. They're likely underinsured. So it's in this crazy environment that we're living in, hyperinflation. I think everybody should be considering the replacement cost of everything that they own.
Yeah,
potentially jewelry as well.
Agreed. Awesome. Very interesting stuff. We've had 300 some episodes. You're the first. I mean, there's been some blockchain ones, but no crypto insurer. So very, very interesting stuff. Thank you so much for telling us the story. Look forward to see what you guys keep building. As clearly, in one way or another, crypto's here to stay, because the banks are investing in it, the big companies are investing in it. That guarantees it'll be around. So thank you so much for your time.
Thank you for having me. It's been a pleasure.